Hello, with me today I have Rob Sumner, Residential Investment Director at Sigma Capital. Hi Rob, great to see you.
Morning.
The PRS REIT does things slightly differently. It's the UK's first quoted real estate investment trust to focus on new build family homes for the private rental market. So could you explain to our viewers how the company is set up and how it makes money?
Sure. Well, we IPO'd the REIT in May 2017. We raised, in two tranches, we raised 250 million initially, a further 250 million the following February, which we've then modestly geared. So we have about 950 million or so of firepower. We had a seed portfolio that immediately dropped into the REIT and started creating income. We have then subsequently, as I described on the partnership model, forward funded house builders to deliver housing for us. So wind forward to 2023, we have 5,129 houses currently built, which we manage. We development manage the process through the delivery. We let the properties, so get the rental agreements sorted out and customers in, and we manage those tenancies. Obviously, that delivers rent. That rent is then subsequently distributed as dividend to shareholders.
Okay, well the trust dividend yield is about 4.8%, which is attractive, but the share price struggled in the second half of 2022 and the first 9 months of 2023. What happened? Was it the same issues affecting the wider UK property sector affecting your business as well?
Simply yes. Any raise in rates to the levels they were at clearly gives investors wider scope to place their money elsewhere. Clearly, as rates come back, the focus will return to these long-term stable income stocks such as ours. And clearly, consensus is that rates are going to come down. So we look forward to being a beneficiary of that.
And it seems like that shift may have already started because the shares have partially recovered over the past month or two. So is this the start of a more prolonged recovery, do you think?
I mean, we think so. And the fundamentals of the business are very solid. The massive upward pressure on the rental sector is such that, well, at the moment, the REIT has between 80 and 90 registered interests per site. And those are sites that are occupied. So we've got people queuing up to actually move into these units. So we can tell that that demand is absolutely there. We know it's there. So the business fundamentals are solid, and we are 98% occupied, 99% rent collected. As I say, the business fundamentals are very, very strong. And it's a very risk mitigated model. In that we have developments, from the northeast down to the southeast, through Yorkshire into the Midlands and the northwest. And if you think about it, 5,129 individual covenants covering a significant geography actually gives you, I would like to say, unparalleled risk mitigation on that income.
Most of your properties are north of Birmingham, in Liverpool and Manchester especially. So is there a geographical benefit? Is property at the right price easier to find, or is it just where demand is strongest?
Our centre of operations is based around Manchester. So when we started, no surprise, we started in our own backyard. And that is sort of the northwest and Manchester and Merseyside particularly. But the idea has always been to grow that portfolio, to provide that risk mitigation, to grow that geography, which is kind of where we now are. If you look at Greater Manchester, we've got a couple of thousand units in Greater Manchester, nearly 1,000 units, in and around Merseyside, Cheshire, and actually we have one site in North Wales. But the balance of the portfolio is now spread from the southeast through the Midlands. We've got a great concentration in the Midlands and up to the northeast. So we are growing that portfolio. But as I say, surprise, surprise, that's where we started. So that's where we started to build our first houses.
Okay, well, look, more companies are doing the same thing now. Is the increased competition a threat, do you think, or is there plenty of work to go around? Would some of the more established house builders, I guess, move into this area?
We welcome it because what it does is it absolutely validates, our initial business model. From a consumer perspective, from a tenancy perspective, it's good news because we're driving standards of renting up. We're providing, rental communities where people can feel at home and not fear being thrown out by, or given notice by, some no fault of their own or through no fault of their own. And other people coming into the marketplace as corporate landlords doing the same, assists in driving those standards that we're already setting. So it's a win-win for the marketplace. And as I've already identified, we have so much demand for our houses that really, we could have multiple entrants into the sector and it wouldn't affect anybody's lease-up rate or occupancy rate. If you look at the housing sector currently, there are about 25, 26 million houses in the UK. A quarter of those are rented currently. We're already seeing some of that falling back because, the occasional amateur landlord is now exiting the market for all of the reasons that they are exiting the market, interest rates being one. And so there's a void to fill. If you actually look at what the professional landlords have brought into the market so far, including pipeline sites, the build-to-rent sector accounts for about 250,000 units. And operationally, it's less than half that. There's a long way to go. This is a very established model in Europe and the US, and it has, I think probably now the most validity to help deliver some of those houses in the UK.
Okay, well, I mean, that sounds promising. And what's your outlook for the rental sector for the next 5 to 10 years? What would the business look like 10 years from now, do you think?
Rental's not going away. It is now a constituent part of the makeup of the way that people hold houses in the UK. Increasingly, we are finding that people are preferring to rent. So we have some, good long-term tenants in our houses. And the reason that they're long-term tenants is because they like the service that they get. If their boiler breaks, they can, use the app and somebody comes along and fixes it. Needs some painting done similarly. So there's some great advantages to doing that. But as I say, fundamentally, the issue that we have in the UK housing market is there aren't enough houses and we're not delivering enough houses. And the sort of systemic failure of housing delivery over the last couple of decades has merely created this massive opportunity, but equally this massive problem that we have in the UK. So that will remain a constituent part of the marketplace. Early projections were, and I'm quoting Savills here, that the terminal size of this marketplace could be somewhere like 550 billion, which seems like quite a lot. But really, when you actually look at the scale of where we are to where we have to get to spend that amount of money, we've got a long journey ahead of us.
Right. Lots to go for, though.
Plenty.
Okay. Rob Sumner, Residential Investment Director at Sigma Capital. Thanks very much for joining me today.
It's been a great pleasure. Thanks.